You probably know about how to use change of character to know when the market is trying to reverse and change its trend completely. How about you use the same change of character as an entry model and see how it plays out? Hello and welcome back to my channel. If you are new, welcome to my channel. You are in the right place. So in today's video, I'm going to be showing you exactly how to use the normal concept of change of character as an entry model. This particular type of entry model ensures that you enter into your trade with very minimal stop loss. You end up not losing so much. That is even if the trade goes against you, and it has a very high win rate. And also, when you are entering with this kind of entry, you are not entering into the market blindly, right? You are actually looking for confluences. You are actually looking for everything that will suggest that price is actually intending to come back to that your zone and actually take off from there. After the disclaimer, I will reveal everything to you. So of course, the idea of change of character entails that, let's say that price is in an uptrend and we want to use change of character to know when price is actually changing structure. So this is exactly what we're looking for. Okay, so let's say we have been marking out break of structure, and of course, if you are very familiar with the concept of change of character, it is very useful when we want to know when the price has changed. Okay, so right here is where price showed us that yes, I'm about to change this trend from a buy trend to a sell trend, and then we're no longer looking for buy positions here, we're now looking for sell positions. Same way, if it is the reverse, price will be coming from a downtrend, it will give you like to give you an indication that okay, I do not want to sell anymore, the buyers have taken over. Okay, so right now I want to be seeing more of buys. Okay, so this is the break of structure right here, another break of structure right here. Then we don't have a break of structure anymore because price was unable to, this swing low was unable to take out this swing low right here, indicating that the sellers are no longer as strong as they used to be, and now more buyers are coming into the market and they are taking over the market. So the change of character actually happened here. Okay, some people may mark out this place, but it actually happened here because of course if you check the higher time frame, that's exactly what is going to show you. What if I tell you that you can use this same exact model and use it as a way of entering into the market, right? As a confluence for entering the market. So let's say that we are in a downtrend. Give me a moment. Let's say we are in a downtrend and price is giving us something like this. Price is giving us this kind of movement. So let's say we are in a downtrend. Okay, and let's say I've marked out a zone that I want to be selling from. Let's say I marked out an order block right here, a bearish order block. I marked it out right here. So what I want is price to actually come into this zone and actually sell from there. But of course I want to have some sort of reassurance that price actually wants to come into that zone and sell from there. So what I'm going to be doing is, once price is approaching that my zone, I would go over to a lower time frame. Now I am on the 1 hour time frame, so I may most likely go down as low as, maybe some traders go as low as 3 minutes time frame, but I don't do that. So I prefer to just stick to the 5 minutes time frame. Okay, so you can go down to 15, 5, or even 3 minutes time frame. Some people even go as low as 1 minute time frame, but of course those are for like snipers. If you're not a sniper, if you're just an ordinary day trader, I think you should just stick with maybe 5 minutes or 3 minutes. Okay, so now price is coming here, and on the lower time frame. Now let's say we are seeing this kind of price movement. Of course price is trying to, now it is buying, but of course you know that it is trying to buy to get to that sell zone. Okay, it's not like the market has changed trend entirely. It is just looking for a way to buy up to that zone where you want it to actually sell from. Now when it gets to this place, okay, when it gets to this place, here is what I want to see. Let me expand this, let me zoom this out. Here is what I want to see on the lower time frame. This is what I want to see on the lower time frame. Now I want price to, where's my path to, I want price to come here as it is coming up. Okay, I want it to come all the way to this point. Now in that my zone, or somewhere very close to that my zone, I want it to come here into the zone, take out the last low that costs, take out the last low, right, the last existing low, take it out. Of course, that is a change of character right there. I mean here, this is a change of character right here. So you can see that price has broken this and it has shown me a change of character right here. But I want it to come back to whatever zone that caused the break of structure. I want it to come into that zone, and then boom, this is where I will now pick my tool, my short position tool, and then sell all the way from there. Okay, that's where I want to be selling from. Sell all the way from there. Some people use this as their confirmation entry. Okay, you know, some traders are more aggressive than others. So this change of character entry model is mostly used by conservative traders. Okay, so they want to actually see the market. If price is coming from a sell trend, price, they want to see price actually buy up into that zone. Okay, then give this. If they don't see this change of character, they are not entering into the trade. There are some traders who are like that. Okay, same thing also maybe when this is for a downtrend scenario. So let's say price is coming from an uptrend. Okay, price is coming from an uptrend right here, and let's say there's an order block waiting for us right here. We mark out that order block. Okay, and price comes right back into this place. Price is coming now from a sell side. It is coming, and it is not that the entire trend has changed. It's just that price is looking for a way to come back to that buy zone. So now that it has entered into that buy zone, okay, this is the last existing low. This is the lowest point that price got to before it went into that your zone, right? So it is like the last swing low. Okay, this is your last swing high. Let me take that. This is your last swing high right here. This is your last swing high right here. I mean on the lower time frame. Now this is your last swing high, this point. Now this is your last swing low. So what I want is for price to come here and take out that zone, right? Remember, last low, last high. Now this high right here, this swing high right here, I want price to come here and take it out. Okay, I want price to come here, take out this zone, then come back to that zone. Then we now look for a reference point, maybe an order block or a fair value gap resting on the lower time frame right there, and then we want to then from there, boom. Of course, on the way up, price may also give other re-entry opportunities that you can enter from. Okay, so basically that is it. It is not confusing. The same let me go back to the sell scenario. The same idea. If you understand change of character, if you understand what a break of structure is, if you understand what a change of character is, it is very easy for you to use it, apply it, and use it as an entry model. If you don't know anything about how to spot your break of structure and your change of character, I made a video about it. You can click right here at the top or somewhere down in the description below. You get access to that particular video. Okay, so after this, just go over to that video and you would actually see more of it so that you have a better understanding. Because if you do not understand how to mark out your break of structure properly or how to mark out your change of character properly, using it as an entry model may pose as a problem for you. Okay, so it is simple. Don't get confused. If we're in a sell trend, mark out wherever you want price. This may as well be a fair value gap. It may also be a mitigation block. Okay, it doesn't matter. I'm only saying whatever institutional reference point, whatever point of interest that you have already marked out that you would like to sell from. This will just serve as an extra confluence for you. It will serve as an extra confirmation for you before you actually take that trade. Some people, if they don't see this, they don't trade. Some other people who are like more, they're not conservative when they are trading. Some just look out for maybe institutional traps, what we call liquidity inducement and all of that. Once they find that out, they just enter into the trade. But entering into the trade like that without looking for this risk, this confirmation entry rather, without looking for a confirmation entry, you are most likely to have your stop loss is most likely to be higher, larger in size. That's what I mean. Your stop loss is most likely to be larger in size if you are not, of course, using this confirmation entry, this change of character confirmation entry. Okay, but one thing you should know is that price doesn't always give this confirmation entry. Price doesn't always give this change of character on the lower time frame. Sometimes price will just go snipe it and then boom. Okay, so it gives higher accuracy, but then you will not always see it. Price will not always present this opportunity for you to actually go down to the lower time frame and confirm if it is actually ready to move. You may not see that all the time. Okay, you may not see that all the time, but when you do, it has a very good accuracy rate, and then your stop loss tends to be way smaller because you're on the lower time frame, right? Your stop loss tends to be way smaller than when you were just maybe on the higher time frame, just placing your sell position to or your buy position to. Okay, so let's have just one example. Of course, like I always say, ensure you go over to your chart and try your hands out on this. Okay, so let's say this is an order block that I want to be selling from. Let me take this away. Let's say this is an order block that I want to be selling from. Is that another block or an unmitigated wick? Whatever it is an institutional reference point that I have paid attention to, and I want to sell from that zone, right? Already I would have marked this out as a liquidity point, right? A liquidity point or an inducement zone that traders, especially retail traders, are most likely to be induced from. So if you are not a patient trader, you are most likely to be caught up in this spike right here. Some people will say, price has left me, let me just jump into it. Okay, price may give that move and then come back and take you out. Okay, so let's go over to the lower time frame. Let's use 5 minutes for you to see how this actually plays out. Let's go over to the 5 minutes time frame. So this is the 5 minutes time frame. Okay, so all I want to see is price coming into this zone. Of course, let me show you what I did before. I want price to buy up to this place. Of course, I know that yes, the reason for this buy is just so that price could, the reason for this buy is just so that price can come here, can come to this zone and come into my zone properly. Okay, so let's say price kept on doing this. I want price to come up to this point into my zone, take out this low right here. I hope you can see, take out this low, come back to whatever zone or whatever other block that caused that change of character right there. So this is the change of character here. Hold on. This is the change of character right here. All of this has been break of structure. We have been seeing break of structure all the way to this, all the way from this point, break of structure to the upside, so that we can get to your supply zone. Okay, but then price can continue to do all of this until it got to this place and broke structure, showing you that okay, yes, I'm tired of this temporary buy and I want to follow the original movement of the market, which is a sell trend, and then continue from there. So whatever candlestick that caused this change of character here, I want to mark it out, and I want to, in that my zone, you can see that I'm marking another zone inside that my old zone, inside the bigger zone. I'm marking out a smaller zone. The smaller zone, why did I mark it? I marked it because there's a particular candlestick there that actually caused this change of character that I had been waiting for, and I'm only waiting for price to come back to that zone, that other block that caused it, and then take myself from there. So now, instead of me to have a wider stop loss like this from here to here as my stop loss, instead of me to have this, maybe my next my TP will be somewhere here. So again, another perks of this is that it actually gives you a larger, it gives you a smaller stop loss, and it gives you a larger take profit. Okay, smaller stop loss, higher take profit. Okay, you can see that, unlike somebody who, if I would be selling from here, you can see how wide my stop loss is. You can see how wide my stop loss is. Okay, so even if I want to be conservative in my take profit, let's say I want to stop somewhere here, that this is a 2.3. Now compare it with when I am actually taking my trade from here, from the other block inside that my zone. Okay, I hope it is clear. From the other block inside that my, you can see I marked a bigger zone, of course, on the higher time frame when I spotted that zone. Then I came to the lower time frame and spotted another break, another change, another candle that caused the change of character. Okay, so sometimes price may come back and retest, and then when price is coming into that zone, of course it is going to give some kind of restriction. You will be seeing longer wicks, longer candlestick wicks, indicating that price is rejecting that price and it wants to sell down. So buyers are unable to push the markets way past this zone. Okay, you can see now that I'm going to be, now that I have put my stop, my sell position tool here, my stop loss doesn't have to be this big anymore. Okay, I can then shrink it maybe here. I can even put it just above the smaller zone that I have marked inside. You can see it. I can keep my stop loss there, or I can just, okay, if I just want to be on the safe side, I can then mark this one here. I can then take it up to this place and then sell from there. Okay, I can then take it up from there and sell from there. It is way better. You can see it's giving a 1 to 4 risk to reward, unlike when it was here. If it was here, let's say it is here, this would have been my stop loss. So at the end of the day, I will be risking 1 to get 3.3 or so. But if it is here, right here, you can see that I no longer have to extend my stop loss this much. I can just leave it at the top here, at the top of that my smaller zone, inside of the bigger zone. Is either I do that, you can see it depends on how you, it depends on, if we go down and actually look at the numbers quite well, you see that yes, no matter how you want to look at it, you actually tend to have a smaller stop loss, unlike when you are trading from the larger zone that you have marked. Okay, so that's like one of the perks of using this particular change of character to mark out your entry model. But then, like I said, price doesn't always give this indication of coming into your zone, taking the last break of structure out, and then all of that, right? But whenever you see it play in your chart, know that yes, you are in for a ride. Okay, so let's take all of this away and let's see what price actually does. So let me just play that and let us see what price actually did. Now I want you to see exactly how price took out this level. So everybody who was trying to sell from this place has been used as an inducement for the actual zone. Okay, so let's continue. Now price has entered into our zone. Let's take a very good look at it. Price has come into the zone. Okay, now I'm looking for like some kind of hesitation on this zone. Okay, I'm looking for some kind of hesitation. Now you can see that our break of our break of structure has happened right here. Our break of structure has been happening all of these places. Break of structure here, another break of structure here. Then finally price came into this zone and it was finding it difficult to move with such momentum that it was approaching the zone with. Okay, of course you can see right here that there is another zone right here that price has formed. Inside of the bigger zone, price has formed another zone right here. You can see that last buy candle before the sell candle. Okay, so you can see this last sell candle before the buy, this last buy candle before the last sell candle, right? So this is like a very strong point that is supposed to serve as a support level. It's supposed to serve as a support level right here, but price took it out, indicating that there has been a change of character. So what I want price to do is to actually come into this zone that I have marked and either take off from slightly below it, inside of it, or slightly above it. Once I see this, I'm just going to be taking my trade from there. Okay, so let's wait for price to do that. It almost seems like price is leaving us. Aha, you can see how price came into that zone. So this is where I want to be taking my trade from, right? This is where I want to be taking my trade from. I'll just go look for my short position tool. So instead of, see what I was saying before, so instead of getting a very larger zone like this that will give me a bigger stop loss but even a smaller take profit, so instead of me to do this, okay, so let's say our target point would have been here. Let's say our target point would have been, our first take profit would have been here, this zone right here. Our second take profit would have been this zone right here. Okay, so you can see the risk to reward that we have. Okay, you can see the risk to reward that we have. This would have given us a 1 to 2 risk to reward. Okay, but if we enter in from this smaller zone right here, you will see that our risk to reward tends to be a lot larger. Our take profit is bigger. You can now see that our take profit is like, our risk to reward is 1 to 6.81, if I'm not mistaken, 1 to 6.81, just because we were able to use the change of character to spot an entry model. Like I said earlier, it would help you to, the stop loss you're going to be using tends to be smaller. Of course, your stop loss has to be has to like give some breathing room. You have to give some breathing room to your stop loss. Okay, and then even if you don't target so much, even if you don't come so low, right, even if you target just this first trap here, let's say we want to be conservative, guess what, we will still go home with a risk to reward of 1 to 4.48. Isn't that good? Isn't that better than actually coming from this wider zone? It means you would have had to extend your stop loss to this place because that zone is way larger. Okay, so that is exactly what I want to show you in this video. You can see that after that, price actually came and then continued to sell from there. I think he even came back and gave more traders an opportunity. This would have been like a re-entry. So at the end of the day, price still came and did what we expected it to do. Okay, so you can see that, yes, let me stop this. You can see price came and actually at least gave us our first TP, which is giving us a very clean, our stop loss would have been here, somewhere here. Just, it would have given us a very clean 1 to 4.66 win rates, right? 4.66 risk to reward ratio. All right, that will be all for this video. I hope you have enjoyed it. Again, like I always say, go and practice, go and backtest. That's the only way you can actually spot this thing even before they happen. Okay, of course, that is when you actually make money, when you are able to spot these kind of things before they happen in the chart. All right, thank you so much for spending some time with me in this video. Smash the like button, subscribe to my YouTube channel. It also encourage me and also help this channel so that more people get to see this kind of information. I hope to see you in the next video where I'll be showing you more about these kind of things that you can use in the market to better your trade. Bye bye, see you in the next one.